Hello and welcome to the Stock Planner channel. Looks like inflation is here to stay. What I'd like to talk about is how do you prepare for this situation. Some stocks will go up, some stocks will go down. What ETFs will best position yourself to take advantage of the movement of the market. Look at all that money. Let's make some. Every time I go to the grocery store, it costs more. Every time I go to the gas pump, it used to cost me $50 to fill up. Now it costs me $104. Going out to eat costs lots more than it used to. I'm definitely feeling the pinch. It looks like inflation is going to be here for us for a while, and I think it'll be here till 2025. Here's the last time we had an inflation, and it was about mid-2007. And then in 2009, things looked a little better and come back out of it. But for about a year and a half, we had a great recession. Then looking back on that period, consumer staples, things that people need, energy, gold, silver, all did better, while the industrials declined a bit. Some financials did worse, especially those that were dealing with credit cards. And consumer discretionary, which are cars and televisions, things that you don't really need, they did a little worse. Anyway, taking that information, maybe we can use it. As I said, some stocks are going up and ETFs are going up and some are going down. These are the ones that seem to go up. Utilities, gold, and I'll talk about more of these later in the video. And some stocks go down. And these are the ones that didn't do so well. The industrials, food, as in snacks and things of that nature, beverages, travel stocks, airline stocks, and I'll talk about more of these a little later as well. So I want to get started, and so take this time to like and subscribe, and there's more information like this on my YouTube channel as well. Well, let's get started. A lot of people use Investopedia, it's free, to get information about trading and define terms. It says inflation is decline of purchasing power, but basically it's the cost of items that you normally purchase, or a basket of items that you purchase, and it costs more today than it cost yesterday. And that's how they do the CPI. They take a basket of goods, oil, some grocery items, and they track out the increase in price of those items and report it. The consumer price index has increased 1.2% in March, and that's an increase over, it used to be 0.8 in February. It's growing. Our inflation rate today is as high as it's been in 40 years. 40-year high. Highest rate since Reagan. I was thinking it was Jimmy Carter. Energy, housing, food all drove this increase. Basically, we know this. How long it's going to last, it's anybody's guess. But I don't believe this is going to be tackled satisfactorily until after the elections in November. Then we might see some slowing, but we're not going to see any real changes to productivity for our country until about 1 year after the 2024 elections. I think confidence in our country is at its lowest and that we're ripe for recession. Some believe, as I do, that while inflation does not cause a recession, I believe it'll slow the growth, especially with the Fed doing what they're going to do, raise interest rates to control inflation. I think our growth is going to slow. So that's what we got to play. Looking at TradingView, which is free, and my settings are in the description below. On the monthly, each one of these bars is a month. Looking back to when the Great Recession started, a little into 2007, signs of the recession occurred right about there, and you had the long slide down. Remember now, these are all 1 month bars. And then the MACD, the stochastic RSI, and the RSI all came around all about the same time. That's the 3 indicator strategy. That it works with any time frame, but 2 hours and up. And we started seeing recovery. And it looks like it's recovered all the way through. This is the S&P 500. Which stocks or ETFs within that performed well? Well, obviously the SPY didn't do so well during that recession. But there was stocks that went up during that period of time. So how do we find them? Well, you could always Google it and find out which sectors perform well during a recession And you see consumer staples, grocery stores like Kroger, BJ, for Costco, even Walmart. Alcohol seems to do okay. I actually didn't know that. Cosmetics, and you always have to die. In general, what does good during a recession is things that people need. Let's see if that holds out. Recently, I put together a spreadsheet with various different ETFs. Last week, I put together emerging markets and looked to see which ETF concerning emerging markets did well. And I was trying to predict which ones would do well for the next decade. I didn't take inflation and recession into effect during that time, but now I'm going to look at which ETFs and eventually stocks, which do well during a recession and inflationary times. So I listed the main ones here in the various different sectors. And then I tried to predict the changes in the last 8 days, 5 days, 15 days, and 2 months. And you can see that the energy is all being all green all those days. But that's not what I'm thinking the recession began on 1 January 2022. Let me show you a reason why I think that. This is the NASDAQ, and you can see it started to slide about 1 January. This is the rut, and it looked like it started sliding about the same time in January, early January. Dow Jones, again, early January, we started seeing a slide down. And the S&P 500 about the same time. That slide down. So I think we may not be in a recession right yet, by the very definition of it. But all signs are pointing towards that, and inflation is growing. So I'm going to act like it is from 1 January. And I put 1 January, recession begins. And from 1 January, the changes that occurred. As you can see, I used Google Finance function with an index to get this number. Google Finance, based on the begin date of that, and found that's what makes this doing a spreadsheet so wonderful. This is free. It's updated constantly, automatically, and you can get a lot of information from it. And the ones that are green, I put in this column here, and the ones that are red, I put over here. And you can see energy, utilities, consumer staples, gold and silver, all the ones you expected. I didn't expect this though. Brazil and Malaysia. And the ones that didn't do well are the financial, industrial. Now this one here is going to move over here as the recession, because I think healthcare is going to be one of those ones that do well. Consumer discretionary, that's things like TVs and cars. So these are the sectors, food, China, and India. So I got to thinking, well, that was easy to do for the ETFs, finding the ETFs. Let's do it for stocks. And I haven't did it for the short stocks yet, but this is a stock list long, and I took my listing of the stocks that I'm currently playing. I think there's 140 of them, 133, and used the name function in Google Finance. Did the same thing of the prices today, 5 days, and got this chart. And you can see the stocks that are currently trending down. That's to find a trend. It could be as simple as this: 1 month, 15 days, 5 days, the changes, and that's showing that that's just downward trend for AMAT, Applied Materials. And I did the same thing again when the recession began, and which stocks did well since that time. Hey, by the way, King Roth's gold has been really, really not so good. I have a losing position in it, but I've had it for a long time. It's starting to come back, but it was a losing position. Well, of course, you got basic materials, gold, and these are the ones, consumer defensive. Tobacco seems to be really good, and Estelle Lauder, I don't know if it's Estelle Lauder's on here. I just bought some. EL, I don't see it. Coca-Cola, Kroger, Walmart, as I said, Costco should be here somewhere. Costco, there it is. These are all that we would expect. Marriott, I wouldn't expect. And so if I was coming up with a strategy of how to use this information, of these 130 stocks that are on my watch list that I play and get signals using the 3 indicator strategy, I would only take longs on these stocks because they seem to be doing well during the inflationary periods. And I think this inflation and recession is going to last about a year. So, is Kroger on your watch list? It's a consumer defensive stock, grocery stores, and it seems to be doing fairly well since January 1st. Should Kroger be on your watch list? Let's take a look at it. So, if Kroger was on our watch list in January, we're looking for using the 3 indicator strategy, the MACD below the zero, the stochastic RSI and it's oversold coming back around, and the RSI and it's oversold coming back around. We had that condition right there. Oh my. The MACD is not below the zero, and it's not below the zero. And the only single you got was that one. Let's take a look at another one. Costco. We're only taking long trades. Recession started. MACD is way below. Stochastic RSI and the RSI all came back around. Anybody got that one? That was a nice long run. Oh my. You had the stochastic RSI, the RSI come back around, and some people would take that. But my rule is that the MACD needs to be below the zeros line. It was not. But it is now. The stochastic RSI is below the zero line. Well, not here and not here. Another way you could do this, depends on your strategy. Everybody could have lots of strategy. You could say, I'm long on Costco, and every time I get a crossover, a positive crossover of the MACD, I'm going to take buys. And every one of those would have been an entry point, and it would have been a winner. Now, I think Costco is going to have a pullback, but then a run again. Costco, discount. People are going to need bargains. Inflation. They're going to look for the cheapest item. Costco is well positioned. BJ, discount. Back to my spreadsheet. Costco, Kroger. Do you have a list of ETFs and stocks that you think will do well during the recession? You should have a plan. That's what the Stock Planner channel is all about, getting that plan. I know this is rinky-dink. It's using free Google Finance, but the spreadsheet, and you could come up with many different versions of this in order to manage your portfolio. I like it. It gives me a roadmap of where I need to go, where I need to be watching. And I'm about to develop a new algo using the 3 indicator strategy and only going long when these stocks occur. And I'll update that buy list monthly during the recession. And I'm going to do the same thing with the short stocks. So I'm going to play this both ways, especially short. Anyway, in the comments below, let me know if you have a watch list, if you're playing the recession, how you're going to play the recession. Which I'd like to hear about it, because I'm in the midst of developing my strategy. My algo, my 3 indicator strategy is working just fine. But I think I can go ahead and do some long-term option calls 1 year out that are going to be easy based on the fact that I know what, or think I know, what's going to occur. Oh, happy trading. Catch you on the flip.